how I lost 60 grand in real estate. Now for this video, I want to be a little bit vulnerable and talk about one of my experiences where I dropped the ball. And I'll preface it by what I thought was going to happen and the mistakes that I made along the way. So to start, we have to travel back in time. We're looking at October 2021. The market has been absolutely blowing up. We've seen record amounts of appreciation, and we've still seen very low rates. And at this time, my wife and I had house hacked a few homes, and we finally wanted to get into a home that we'd be good with for about 5 years. So we went under contract to build a beautiful $1 million house sitting on an acre in Mapleton. Now we started designing, everything was going well. In October, when we put the house under contract, to February of 2023, we saw about 15% appreciation. So what that meant for us was that our house was now going to be worth $150,000 more than what we had it under contract for. But come March or April, the building costs started to go up. And so the builder came back with a new bill and said, hey, you guys can back out, or the price that you guys can pay is gonna go up. Now I'm thinking, hey, we've built up a good amount of equity already on this house. So even if we pay a little bit more, we should be just fine. And then May and June started to roll out in 2022. And then we started to see interest rates go up much faster than what any of us had anticipated. And month after month after month, we were starting to see the market decline. But all along the way, I said, hey, I've got a decent exit plan if things don't shape out. With the contacts that I have, I can just get a hard money loan, close out the deal. If things don't make sense, then I can just sell it, make a little bit of profit, make my money back and walk away. But prices kept declining and they kept going lower and lower until we got to a point that the house that we were building was no longer worth what we were under contract for on it. And at this point, the $60,000 that we had in deposit is non-refundable. So we had a choice to make. Do we continue pushing forward with the new rates, continue to buy the house, but have our monthly payment be $3,000 or $4,000 more than what we had anticipated? Or do we take the loss up front, but save ourselves a lot of capital on the back end and make sure that we're not super strapped every month? And that's when we decided to let go of the house and make sure we made better financial decisions. We sold one of our other houses that we were living in Spanish Fork and moved back to Orem, which was a house that we were renting. The thought process was, we're going to drastically reduce our monthly expenses. We're going to free up a little bit of cash, and we're going to prepare for new opportunities. And by doing that, we were able to buy 2 new duplexes and a townhome. And we're looking at a couple other investment opportunities now. And with those investments, we've already recouped the $60,000 that we've lost. And by buying these good deals, we have over $60,000 in additional equity between these new properties that we've purchased. And that came by buying fundamentally good deals. But the moral of the story is, don't increase your lifestyle costs too much early on. The earlier on that you start to increase those, the harder it is to accelerate the growth of your business and your net worth over time. Because instead of having a $7,000 a month payment, we now live in our house, rent our basement, and have a $1,000 a month payment. And that opens up new doors for additional investing and for growing our businesses. And if we do both those things the right way, then we can always come back and buy a new beautiful home. And in real estate, I've never lost money except for when I strayed away from investing in the fundamentals. And as long as I bought within my strict buy box, we've always made money. So learn from my mistakes, invest the right ways, and continue to grow. And once you've really reached it, then go out and splurge.